Mr. El-Badri said that the new reality, he called it.
Yeah, pump whatever you want.
Yeah.
I mean, if you dig below what he was saying about the price, the takeaway is do whatever you want. And if you take a look at, say, what El-Badri noted, that 30 million barrels a day is guidance, not a quota. So that sort of further implicates that you can produce what you want, particularly when it comes to Iran and Iraq. And you have Al-Naimi, who's the oil minister for Saudi Arabia, saying oil production is a sovereign right. So they're not going down without a fight. And the issue is who would cut. I mean, Iran wants to make more money because the sanctions have been really crippling their economy, right? So once that's lifted, they're going to want to pump as much as they want. Iraq production has also been crippled by the civil war there, so they're going to want to pump as much as they want. So who's going to cut? Saudi Arabia? Don't think so.
So, Alex, what does that mean for oil? I mean, obviously, it also goes back to oil prices, right? So are we actually going to see this rebound that we have experienced in the last quarter kind of come down again?
In terms of price?
Yeah.
It would. Well, I thought we were going to go into the 30s, and that didn't happen either, and that's why I'm not a trader. But it would seem like, looking at the fundamentals of the market, that, yes, we would see lower prices over time.
Yeah.
Part of what we've seen today is actually a little Asian demand has come off a little bit. That has been a huge demand driver, particularly for countries like Iran, Iraq, and Saudi Arabia, and that demand's wavering a bit, meaning that they were just buying oil to fill their strategic petroleum reserves, not necessarily for end-user demand. Barclays, in particular, says that if OPEC holds its output at 31 million barrels a day, which is, oh, by the way, what they're doing, that the market will be oversupplied by 1.3 million barrels a day.
Alex, you just talked about fundamentals. What's the strong dollar doing to these fundamentals? Is it turning it on its head?
Well, yes. I mean, Deutsche Bank said that one of the main drivers of oil prices will actually be the dollar. We saw that inverse correlation break down over years, and it's really picked up as we've seen sort of the Fed diverge from other central banks. And that was kind of the action we saw today. I mean, the initial response for oil prices was to go up on that OPEC meeting, and then it went back down, and you could attribute part of that to the stronger dollar on that jobs number. So that will definitely be pivotal for commodities all across the board. You go long dollar, short oil, vice versa. That kind of trade working itself out.